one of which being the, I guess, exodus or the exit to the right of the US dollar as a global world reserve currency, of the petrodollar, basically backed by oil, used as in primarily in trade of oil, but in other trades of goods, which has been sort of um, waging war with, we'll call it, the BRIC and other now countries joining into it. So we're talking about China, Russia, Brazil, India now, the Middle East, Saudi Arabia. Most of the producers of natural resources are going to be able to, I think, separate from their reliance on the US dollar, and that should drive down. We're going to talk about how that's going to affect your real estate portfolio, your stock portfolio, what you can do about it, all of that. And if you guys have any questions, drop them down below, because again, this is a live Q&A. I give free help, coaching, consulting, whatever you want to call it, just live Q&A. We can shoot the shit, whatever. That's what this is all about. So yeah, here I am sitting here ready for another weekly stream. And today we're going to talk about the US forecast, I think. So I was reading a couple articles before this just to kind of get fresh on where people think and where analysts think the price of the US dollar will be relative to Canadian dollar and to the euro and some of the other currencies that's important. For me, my net worth is largely in Canadian dollars. More than 3/4 of my net worth is in Canadian dollars. So I would say, like, I have the S&P 500, I guess, and all that's US exposed. So it's important, I think, when we're thinking through how this plays out, if you have US properties, if you hold the S&P 500, any, US based retirement plans. If you plan to retire in Costa Rica, the Bahamas, all of those countries currently peg, like the Bahamian dollar actually pegs 1-to-1 with the US dollar. So it's going to affect your retirement if you plan to retire in this currency. So it's important to think through, if you still plan to retire somewhere where you need US dollars, which a lot of the South American countries is still the case, a lot of the Caribbean is still the case, the US dollar is dominant. Will it continue to be dominant? Probably, because again, in that sphere of the world, the US is still likely going to be a powerhouse. In the same way that we think, like, 100 years ago, people said, hey, the death of England, right? Like, England's no more a powerhouse. They're still powerful today. England's still a great place to be. A lot of people like to be there. They're still a powerful country. They're not a world power. It's probably how we'll see the US be, or there's going to be war, and it's going to be probably an economic war. So it's that's what's likely going to happen. The US is probably not going to lay down and take it when countries around the world stop using their dollar as a world reserve currency, and then they are forced to buy other currencies. They can no longer control the monetary supply, because right now they lead the charge. If whatever the US Fed does related to interest rates affects global trade, global inflation. We're basically pegged to wherever the US dollar and the US Fed consequently does. So it has big impacts on our real estate portfolio, on our stock portfolio. So how do you get around that? And like, just thinking through that, you can hedge. You can currency hedge. It's something I've done before. It's something I've failed to do on occasions, and also been, bit in the ass because I didn't do that. But it's important to do. And I think a lot of investors don't know that they can hedge through interactive brokers. You could also open like you can call any of the currency trading firms. I use Monex. I like them. Monex Canada, but they have a seat rate with Goldman Sachs at the trading floor. You can get buying between currencies at almost spot. Interactive brokers also lets you buy almost at spot price. Whereas if you go into a bank and you're like, hey, I'd like to trade in my USD for Canadian. I like to trade in, or you go into a Canadian bank, I like to trade in my Canadian for USD. They're going to mark it up 3-4% on top of spot. So they're going to rape you for 3% on each way. You'll lose 6-7% just in currency fees. So don't do that. Don't be that person while we're talking about currency. How do you protect yourself? Well, you can go into those same trading organizations that do the trade, and you can buy swaps, or you can buy hedges to protect yourself. It doesn't cost a lot. For like, 1/4%, probably 0.5%, you can protect yourself out for a year at a set price. And basically, if the currency does fall, then those contracts protect you against that, and you get completely insured against any downside risk. On the other side, if the currency moves against us and we're wrong, and the US dollar becomes like 2-to-1 to the Canadian dollar, which I don't think will ever happen, but let's just say it did, then the contract just becomes, you lose what you paid in insurance premium to protect yourself. So there are ways to protect yourself. Insurance is an important vehicle to protect yourself from that currency risk. So there are ways to do that. There are ETFs, or exchange traded funds, that are currency adjusted. So if you're Canadian trying to buy the S&P 500, you can buy certain ETFs that are already currency adjusted. So that's super important. What other things can you do through this? You could buy things like Bitcoin, gold, poor man's gold, silver. Silver is the poor man's gold. I hold physical gold and silver. I also like Bitcoin. I have a little bit of it. It's not a huge part of my portfolio, but those types of asset classes are rallying. Gold is hitting an all-time high ever, the highest gold has ever been. It is on track to now surpass. So that's interesting. Gold's had a really lackluster, really just a horrible performance in the last decade and a half. So it would be great to see gold, have a better performance, because it's really not done well. I think that crypto will move hand in hand with as a safety asset class. However, it strangely has correlated to the NASDAQ growth tech stocks. So typically what you're seeing in the tech space, you're also seeing in the crypto space, which is, I guess, makes sense in some ways, because there are parallels between the advancing tech of, the decentralized finance and some of those applications being applicable and, I guess, directly correlated to a lot of these tech companies. But there's some big differences, in my opinion, especially with Bitcoin. Some of the other things like ETH or some of the other tokens, you can print them to infinity, but there's a finite supply of Bitcoin, which makes it quite valuable. And it does make it a place people can store and feel safe to store value over the long term. It's like a digital gold, right? So again, small percentage of your portfolio. Don't go crazy here, guys. Don't, yes, the US dollar is probably going to fall. We've seen it fall 2.5% to the Canadian dollar in the last week and a half. There probably will be more of that. It will probably retrace where it was a year ago. Typically, in bullish times when rates are low, the US dollar isn't as needed because other currencies are strong. Everyone's doing a lot of trading. No one's afraid and piling into treasury bills. But in times of instability, people are piling in, and with the yield being so high, people are piling into treasury bills. Now people are saying, well, can we trust the yield we're going to get? And then the bond market's also saying that the Fed's going to pivot early, which I think is incorrect. I've been saying that for about a year now. I think that this is going to last into 2023. We are not going to pivot, I don't think, in May. People think they're going to be pulling back rates. I think the best case scenario is probably a pause, which means they keep rates as high as they currently are, which is very high. Likely we get another hike, but it's very possible that we experience more pain to come too. So if I'm a betting man, I would say the bond markets are wrong. The last 18 months have shown us the bond markets have no idea. They incorrectly priced in, they said rates would be lower. They wouldn't be as high or for as long, and they've been higher for longer. So I guess we'll see whether the bond markets are accurate or whether the Fed's going to rug pull on us. I guess we're going to find out. Again, remember, guys, I know I've been very bullish very bearish in my coverage the last year. I've had people reach out and say, hey, Mike, like, you're so bullish. You're always buying property. Why are you so bearish? Because I think there's enough bull energy out there. I think there's a million realtors, and maybe it's my feed is curated on social media that, like, the people that I follow are all super bullish. But I follow a lot of bull energy. There's like every realtor, every real estate investor is like, to the moon. All the crypto investors are like, to the moon. The stock investors are like, yeah, it's a bull market. Like, let's go. We just had the best quarter in a decade, by the way, on the NASDAQ. So that was interesting. I've been shorting that, and somehow I made money. I'm still ahead despite shorting for almost every day trading day of the last quarter. And that is thanks to theta decay. So I sold contracts that were agreeing to pay a certain price, and I got a premium for selling that insurance. Now, the contracts did not go the way that I wanted. I mean, the market just ripped up. But on days where it was down, I closed out contracts, opened new ones, and collected a lot of theta decay premium. All that premium you get for insuring the market's downside, I collected that. And even though the market never really went to the downside the way I had wanted it to, I was able to come out pretty much ahead. I am actually up year to date, which is great, considering my benchmark is short the NASDAQ. So the inverse of the NASDAQ is my benchmark. And I've just massively outperformed that, thanks mostly due to straddling, both sides of it. A lot of the days I'll have, contracts on both sides for risk mitigation perspective. But yeah, trading is not something that, like, I want to teach on this channel. And people have asked me, like, why don't you focus on trading? And it's like, my thought is this. There are collectively a handful of traders over a 25-year period who will beat the market. So if you are a trader and you beat the market consecutively for a couple of years, stop. If we're in a down market, stop. Start dollar cost averaging in on the way down, and don't look. Don't touch it. Because net of fees and net of your time and your energy, you likely won't outperform the market. There are very, very few traders who have outperformed the market over the long period of time. So buy the market. Enjoy the yield. You've got to build a business around it. If you're going to do trading as a full-time pursuit, which I don't, again, like, I trade for fun. For me, it's a play money. I like to run the direction of bullish. I like to be selling my wheel. The wheel is what I call it. So I sell puts, then I either get free money or I get assigned the contract, because I'm ensuring that I'll buy it if the price falls of the index. So I agree, in the future, I'll buy the index for a discount. because let's say it's trading at $100 right now, just hypothetically, I'll buy it at $95. And I sign a contract and they pay me $2 of that. So I get to agree to buy it at 95, but I get $2 to do that. So they're going to let me buy it at 93 because I get an insurance premium. And if it doesn't go below $95, I get 2% for free. 2% yield on a 2-month basis is like 20% annual yield. So I get that nice yield. I collect it, I hold it, it's great. When you're wrong, make sure you're running the wheel in the long direction because time heals all wounds, right? So over the long period of time, you can get the index 95. Let's say it goes down to 85. You buy a little more or whatever, you hold on to it. It always comes back, right? You hold the entire index, a collection of all the stocks, you will always win. The data supports always being long over a long period of time. This last year, I've been shorting, again, because I just see so much fundamental macro pain now and ahead for us as we go into this recession. And I think that the market is overly optimistic. There'll be a time where again, like in the next pullback, I'll probably go long again. There's been periods over the last year for like a couple of weeks where I've been long because things were oversold. I went long in October. I went long in started January this year. I cut that out early. I cut everything in like third week of January. I wish I didn't. I wish I'd stayed long the whole time. But hindsight being 2020, I was like, look, things are a bit oversold here. So I like to buy when there's fear, and I like to sell when there's greed. And so when there's maximum greed, like right now, I think there's a lot of greed in the market, or there was a week ago. And so I started selling short on the market. I just felt like there was just too much hype. But for me, I have another portfolio that's equal size that's just long. I hold dividend stocks and quality stocks, and I have long-term plays that, again, are all bullish. And then the rest of my net worth's in businesses and in real estate that is all bullish. I want rates to go down. I want real estate to rip up. I believe long-term real estate will rip up, and data suggests that I'm right over the long period of time. But when I talk about my trading portfolio, to me, a lot of that is play money, it's hedging, it's protecting, so that if I'm getting destroyed on my real estate portfolio, I'm making money over here so I can feel positive about every situation. So that's why I can come to you guys and say, hey, we're probably gonna have a war, and say that with a smile on my face. Not that I'm happy, I don't want anyone to die, I don't want any of those things to happen, but like if you prepare for it and you think through how this can play out, and then you say, okay, what can I do to protect myself through that? What are the things that I could apply that would protect me through a situation like that? You'll be much better off when it happens because you've already played through the scenario in your mind. You've played through war. You've played through the Fed staying higher for longer. I've played through the Fed pivoting early. I mean, that's amazing. That would just rip. Real estate would just rip. And I would do really well. And I'd buy a lot of properties and I'd gear up my real estate business to like, right now I'm in like first gear, second gear. I'll get into third or fourth gear and go hard. And not that I'm not going hard right now. I'm just not taking a lot of risk right now. I'm not in a really frothy bull market. I can just flip almost everything I come across as long as it's, wholesale off market, a good deal. But now I gotta, like in this market right now where there's potential for further pullback, I gotta be really careful. Sorry, I gotta be really careful, right? I wanna make sure that I don't end up in a situation where I'm underwater, because you could buy a flip and the market pulls back 10 or 15, 20%, and that could have been your whole margin. If you bought 70 cents on the dollar and you had random and carrying costs that ate up the rest, and you have selling costs and whatnot, you could potentially have no profit in a falling market, right? Even if it's a great deal, you can get destroyed by market conditions. So I don't know. I like real estate again because I can actively lean in and get a higher return. I can, even in a down market, I can still run the business and make money. And if I don't, if a really bad flip happens, if I bought smart and it's for cash flow positive, I can hold that property and eventually I'm right. Because the price always goes up over the long term in real estate, stocks, everything. So you want to buy the dips, you want to hold. It's really, really important to be diversified on a lot of, ideally you own several properties, not all in one property. Ideally you own not just all in real estate, you own stocks, crypto, all the different asset classes. I like different sectors of stock, like not just growth, not just tech, not just financials, not just your manufacturing, your not just your consumer staples, not just you want a little bit of everything, right? You want every piece of the market, because if you own a little piece of everything, if oil rips up, you win. But when oil rips up, that might also affect another company, like tech might fall, right? Or another company that's a logistics company, if oil is going way up, it might get crushed, right? Certain segments, they balance out. We go through business cycles. And if you own a little piece of everything, you continue to constantly win. And that's the most important thing about building wealth. I've been saying this for more than a decade. I started on this journey 13 years ago, 14 years ago. Yeah, it's almost 14 years since I found the book, Early Retirement Extreme. No, it's been 13 years since I found that book. I found it in the start of 2010. So I was in my dorm room reading it in 2010 and thinking to myself, I'm aging myself, and I'm now 30 years old, which is crazy. Like I've been retired for longer than I retired, for longer than I worked in the professional world as a consultant. That's crazy. Like even if you add up all my time in school, everything, I've now been retired. That's like my profession. I'm an investor. You're like, what do you do? I'm like, I invest my money and it grows, and I live off of the growth from that. And sometimes it's passive, and sometimes I lean in and it's active. And when it's active, I don't just get a 10% passive return. I sometimes get 20 or 30%. I get a better return sometimes for that effort. Not always. You know, there's losers too. You can't always win, but it's a good life. It's a good life, guys. And I want that for you guys too. I want you to have the same types of freedom that I get to have. That I want you to be able to come down and join the Freedom Collective, which is what I'm going to call it, FC. By the way, some on the down low between you guys. I'm starting something. It's going to be like some sort of mastermind or some sort of club. There's going to be various levels to join it. There will be levels for entry people who are just starting to do deals. We'll be doing deals together. I'll probably be doing some coaching through it. I'll probably bring people on to help me with a lot of that because I want it to be more of a passive business for me. I want to step in like once a week and give a high-level chat and answer any questions people have and just facilitate that growth. But I want to build a group of people that are between the Bahamas, Canada, and the US. I want to have my triangle of people. I want to build a freedom collective of amazing people that also want financial independence, that have unlocked that for themselves, that want to grow and build businesses and cross-pollinate. And there's just so much strength in having a community of people that are like-minded, and the things you can accomplish collectively. Like over the next 25 years, imagine if I ran 100 mentees through that program, and 50 of them over 25 years, if we make like $500,000 at the start, if you compound that over a long period of time, you continue to hit bases, you're looking at like collectively, the Freedom Collective could have an alumni base of $1 billion in capital. And that just like gets me super excited. So that's part of what I want to do. And I think that it could be a really cool, kick-ass club. So the Freedom Collective is what I'm calling it. And I really like it. I'm really excited for it. So for those who are waiting for the mentorship program, the group, I haven't defined how it's going to look, but it will be my way of, there'll be some community service aspects to it for me. It'll be a business. Like it will definitely, there'll be a cost to be a part of it, but it'll be tax deductible. You'll be able to come out on probably cool masterminds in Florida, cool masterminds in the Bahamas, again, cool masterminds on the lake, on my cottage in Canada. There'll be some really cool experiences we can do, and there'll be some virtual stuff, and there'll be a community where all of us can work together and cross-pollinate. So that's what I really want. I've been wanting to build it for a while now. I'm gonna do it. It's coming. I'm slow to it, again, because I just don't dedicate the time to it. I should. I want to. I just have so many competing priorities right now. I love, real estate. I love, talking with people about real estate. So anything that intersects with personal finance, real estate, that's up my alley. And this I feel like is a good fit. So it's coming soon, guys. Jonathan, hey, how you doing? Yo, what's up? Good to see you too. David says hello again from Alberta. What do you think of Ontario beefing up reno evictions? Individuals can be fined up to $100,000 and a 60-day grace period to move back in once renovations are complete. Yeah, David, it's Ontario is becoming a very difficult place to run a real estate long-term rental business. Real estate as a business in Ontario is very difficult. There is HST considerations now. If you substantially renovate a property, they're going to make you pay 13% of the sale price, which is sometimes the entire profit of the flip, to the government as a fee. And you can't force the buyers to pay it, because why would a buyer pay 13% extra to buy your property? They wouldn't. They'll pay market price. So that's just going to be a cost basically borne by the flippers. On the landlording side, they are making it very difficult to evict any tenant that pays their rent, even if their rent is 1/4 of market rent. So if their rent is $600 and the market rent is $2,500 for the house, they don't care. They'll force the landlord into submission and make them pay at a loss and run this business at a loss. So that's scary. What's good is that the board is now hiring a bunch more adjudicators. I just saw a post about that. They're going to hire a bunch more staff. So there's not going to be a 1-year wait now just to be heard. Like if you apply, the tenant hasn't paid you rent, it takes a year in Ontario before they even hear your case, and then another 60 days before you get them out usually. So it's about 8 to 15 months to get a tenant out. The minute they say, like they come to you and they just slap you in the face and be like, I'm not going to pay any rent, have fun. Like I'm actively going to do nothing. I'm not going to be a scumbag tenant. I'm just not going to pay you. Serve me what you want. They have a year. If they're crafty, they can get 2 years out of you. They can find ways to get it thrown out, typos, and the notices given. Like I've seen some crazy stuff. But yeah, the restrictions in Ontario I mean, the reason the $100,000 fine is there, to answer your question specifically about the $100,000 fine, is they don't want people going in and unlawfully evicting people. It just doesn't look good on landlords. So that's why I believe in cash for keys. I believe you should come to your tenant and have a valid conversation. Like come at it with logic and say, hey, I want to renovate your unit. I want you to move out. How much is it going to cost? I'll help you find a new place. I'll pay for movers. And most of the time, the tenant has a number. And sometimes, often, that number coincides with the number that you can afford to pay. And the number I use is like at least, or at most, I would say, it depends on the unit, but 12 months of rent differential. So if their market rent is $1,000, they're paying $500, you get a $500 differential over 12 months, that's $6,000 cash. So you give them $6,000 cash, no problem. You can deduct it as a landlord, give it to them. They get a nice bonus. They're happy to go move on and take $6,000. In some cases, these tenants have never even had $6,000 in their hand ever in their life. So it's substantial. But more important than you getting that money back in 12 months, having now turned that unit around, in most cases, you've increased the value of the building by like 2 to 3 fold. When you can double the rent, you can double the value because you bring the net operating income, NOI, up on the building. It directly correlates to the value of the building. The building is not worth a lot if it has tenants that aren't paying much money. It crushes the value of said building. So yeah, that's my take on Ontario. I would stick to short-term rentals, hotels, seasonal stuff, where you don't. I like student rentals too, as an example too, because students don't tend to stay behind, and you can curate and pick. Like if you picked really good students, like I'm talking students who have like an 85 average, who are like bound for medical school, bound for dental school, business. You pick like really successful students, engineers. Like I always pick the best students. Like I look for the doctors, the engineers, the science majors, the math majors, the business majors, because those people, if they're doing well, and you can show ask them for their transcripts. That was the most important thing. More important than credit score was their transcripts. Are they an A+ student? The reason that was important to me is because I knew that they studied a lot and they didn't party. And I knew if their parents were willing to co-sign and I could see that their parents were well-to-do, they would definitely not stay in my property more than 2-3 years. They go through school, they leave. So I don't get stuck with rents getting crazy and then I can't change it over. In a student rental situation, you have flexibility. You bring in new students every couple of years. So that's a huge bonus in Ontario. So those are the only businesses that I would run. I would never run a long-term, passive property management, rental property business. We've got a bunch of tenants with rights. Because again, there are no rights to the landlord. And over time, like the Ontario minimum wage is going up to almost $16.55 an hour, I think now. That will create rent inflation of at least 10%. That's a fact. Half of the renter base in London, Ontario, I'm talking London, Ontario, because that's the city I'm in, are on minimum wage or directly affected by raising minimum wage. So they're all going to get a bunch more money and they're going to be able to pay more for rent. And so there's a shortage of supply and demand because again, why does anyone want to build long-term housing supply when they can't make a profit? And in this market, we've seen houses have fallen, cost has increased. So now you've got a bad investment potentially, right, for the builder to take on. Why would they take that risk on? They wouldn't. So I would think it's important through those times, it's important to manage risk, right? And what I think we'll see is rents are going to skyrocket, directly proportional to this, and it will create another wave of inflation probably in Ontario specifically, rent inflation anyway. And that rent inflation will exacerbate the problems. So if you rent a unit out now, just know a year from now, that unit's going to be probably renting for 10% more. And you're going to be on a rent control of like 1%. And you're not going to be able to raise the rent. And after 3, 4, 5 years of that, your tenant's paying 50% of market rent. And that's just how it goes. That's just the reality of Ontario. A place like Alberta, you can raise rents as much as you want. A place like Florida, you can raise rents as much as you want. That's huge. That's a good long-term strategy. So I avoid long-term in Ontario now. It's just my rule. I'll flip. I'll do, Airbnb. I'll do seasonal rentals. I would buy a hotel or something. There's a lot of super cool stuff that you can still do in Ontario, but you got to be really careful, guys. And substantial renovation now for flips, like doing big renovations with permits and like big conversions and stuff and building projects, not profitable in Ontario anymore. Again, you're paying a lot in HST, so it's making it more difficult to flip, but not impossible. You can still flip, just more difficult. Hey, a super chat. Mason says, hey, Mike, been busy with work, happy to catch up. What do you think about investing out east, New Brunswick, Nova Scotia, long-term multiplexes? Again, I don't know the rules out east. I don't know how the landlord-tenant board structure exists out there, or the Residential Tenancy Act, how it applies out there, but I've heard good things. People I've talked to have said that the climate is great from a landlord-tenant perspective, there's less of a shortage that exists. And so in Ontario, there's a big shortage of housing, available housing. And so that all the poor tenants in numbers have lobbied and gotten increased rights and made it really hard to operate a business in Ontario. But out east, and even in Alberta and like Edmonton, there's other challenges where like property management can't even keep the units rented. You look at their rent rolls and there's like 2 vacant units. In Ontario, you would never have a vacant unit. You'd have a lineup like 100 people long to get to rent the house. Again, because of the rules they've created, landlords are very strict on how they select their tenants. Whereas out east, if you're a good property manager, your property will be filled. If you're a good operator, your property will be filled. If you're not a good operator, you might have a building that's 30% vacant. So as a good operator, you can really clean up out east. You can really clean up in, say, Alberta out west. So those fringe pockets, those provinces, I guess, in Ontario in Canada, are great potentials to invest for longer term. Again, because you have more control and you have more rights. In Alberta, you can literally just raise the rent, whereas you can't in Ontario, you're rent controlled. So that creates real issues, right? Like most of the reno evictions, all the schemes landlords come up with to try to get tenants out, pay them cash for keys, all that kind of stuff, that all existed out of bad legislation that forced landlords to operate at a net loss. Like imagine hydro's gone up 10%, gas has gone up 20% on our gas bills, our property taxes are jumping up 20%, the mortgage is double, and your rents are frozen? Are you kidding me? If you had $200 a month profit in Ontario, you might have negative 800 right now, or negative 1,000. That you can't force that on private citizens and say, hey, you got to subsidize these poor people's cost of living. The government can step in and subsidize cost of living. They won't. No. They'll put it on the private citizens in Ontario because, again, we have horrible government, bad management. Great country, great overall, we have a lot of natural resources, some of the most fresh water in the world. We have a lot of great natural abundance. We're a huge country. Canada's a beautiful, beautiful, huge country. But bad management, bad policy decision. I hope that reverses, but again, I guess it's good for the bottom half. The bottom half of people who do nothing and just sit around and work, maybe they work a job or two, who chill a lot and don't save for the future and don't delay gratification. They're in line at Starbucks. They got the newest iPhone. They get the newest kicks, the new Jordans on. But then they have no money in their bank account, no savings, and they can't make rent because they bought the new Jordans and the new Gucci belt. But anyway, we're rewarding that in Ontario. We're like, here's a handout, and like, here's all the rights. What ends up happening is you create a society that's kind of falling apart because you need that private investment to grow. Anyway, great to hear from you, Mason. I really appreciate the super chat. It means a lot. I think there's definitely opportunity out there. Someone sent me a sixplex with seller financing in out east. It was in like St. John's, I think, and I think it was in St. John's, and it was like 200 grand or something. You had to put like 20K down or 30K down. It was crazy. Like the math for it was a 6-unit building. Like the math on that, it was like $25,000 a unit or something. It was crazy. No, it was more than that. It was like 40,000 a unit, but still like $40,000 a unit, super cheap. If you rent that unit out for $700-800 a month, that's like almost 2% rule. That's in Canada. And the landlord-tenant relationship is better out there. So there's definitely more opportunity out there. If I had the connections and I could develop some sort of competitive advantage to buy under market, I'd be buying out there. If anyone knows of any opportunities, hit me up. I might be game. I'm sitting on some cash right now. Q&A time. We've always been in economic war. I mean, yeah, there's been varying degrees of war, I think. It really is one of those things where the U.S., the power behind their dollar now used to be backed by oil, and like that's disappearing, right? Like, let's be honest here. The green movement in the U.S., where they stopped their fracking and all of that, they basically have dropped their production down. At the same time, that's allowed OPEC to basically raise price whenever, like Saudi Arabia just raised the price of oil to like $80 a barrel now because they dropped production, right? They just dropped the production, price is going to fly up. Before, the U.S. was actually investing in reserves. So was Canada. And then again, Canada is very green friendly. I'm not even 100% sure that it's making a difference because again, if you just stop, and I think we actually extract the oil in Canada through oil sands and things like that out west in a more clean way than they're doing it in the second and third world. So we have better scrubbers. We have better technology that allows us to run more efficient machinery. So we can extract the oil better for the planet. But we're saying, hey, shut down the pipelines, shut everything down. make Canada green, whatever. And it's like, we're going to save the planet. And it's like, you're saving pollution here. And then they're just going to produce the amount that we don't produce, they're just going to produce over here in a less efficient way and pollute the earth the same amount. So it's like, it does nothing. It does nothing. It's like saying, like, oh, I'm not going to pollute, but then your neighbor beside you in their house is like, okay, I'll just pollute double. And it's like, that's exactly what happens, because the supply-demand balance, just how it works. It sucks, but now we're at the mercy of those that produce oil, which is, again, Russia, the Middle East, Brazil. Those are the places that are going to pick up the slack. And I've been to Rio. I've spent some time in Brazil, and I've been in downtown Rio, and it's stinky. Like, it's just people don't, and then the second, I'll call it second world, because Brazil's like second world. In the second world countries, their first focus is like feeding people and growing and advancing in technology and their infrastructure. They don't care about, whether the 25-year-old truck is polluting a lot or not. Like, there's a lot of old trucks on the road. That's just how it is there. And they have just different priorities. And it's funny how in the first world, like, we're like virtue signaling. Like, we're doing something actually to save the planet, and all we've done is just shot ourselves in the foot, because, again, we have no control now. It's going to create another wave of inflation, effectively, is what I've been saying. That second wave of inflation, I think, is coming. We'll probably see it this fall. There may even be a pivot before that. I hope not. The Fed's been talking, very seriously, because no one took the Fed serious. Like, the Fed, like, you rewind 18 months ago, and the Fed's out there saying, hey, rates are not coming up. We are going to keep rates the lowest they've been. We're going to keep them low. We're just coming out of COVID. Borrow as much as you possibly can. Lever to the tits. Invest in the economy. Hire people. Do projects. Expand. Grow. And then they go and like, oh, actually, we printed a lot of money and we created inflation. Like, we're so sorry. We're going to need to raise rates. And then they waited a really long time to do that until the whole COVID thing was done. It's funny how, like, it's just done now. Like, no one talks about it, especially here in Florida, but, like, just not a thing. And literally 1 year ago, in Canada, you couldn't go to a movie theater, couldn't go to dining, couldn't go into Home Depot. You couldn't even go watch a movie. It was like you had a Jew star on. And if you were a Jew, you couldn't do anything. And by Jew, I mean you were unvaccinated in Ontario. It was crazy how that doesn't matter anymore. And no one's masked up and no one cares. It's like the virus just disappeared. Like, we're all fine now. Woo! It's like, what? What? Priorities. It's crazy. Some of the people, I had screaming matches with certain family members that were like, you're the worst human being alive. I cannot believe you're going outside without 2 masks on. Like, what are you doing? How have you not gotten 3 vaccinations right now? Again, I'm actually pro-vaccination for anyone who wants to get it. I actually have, like, most of my family got it. I'm pro-vaccination. I got it. It's one of those things, like, I'm not going to get boosted. I don't care. But it's just one of those things where, like, it should be a freedom of choice. And the data didn't support anyone under 30 getting it. Under 25, definitely in getting it, right? So it's just, I mean, I don't know. It's just really stupid. I felt really bad for the rights of those who were allergic to it or had a negative reaction to the first one, didn't want to get a second one, and they couldn't do anything. And it was like, they couldn't travel, they couldn't leave the country. It was literally like prison. It was like a beta test of what they could do if they ever wanted to turn off, they could just shut us down. Say, hey, you're a minority group, we don't like you, you don't align with our current government structure or whatever. We can just shut off your bank account, which they did in Ontario. They shut people's bank accounts down who supported the convoy. Anyway, I don't get down that rabbit hole, but that's why I love Bitcoin. That's why I love cash, gold, silver. You should always have a percentage of your worth in something that they can't shut down and control. They very, very well could shut down anyone's bank account whenever they want. It's a scary world we live in. Anyway, back down to the Q&A here. I don't want to become a tinfoil hat kind of guy. It's not my goal here tonight. Render says, thanks for hosting. Are you still shorting the market or are you buying the dip? Any stocks are catching your eye? I go back and forth. I try to balance to neutral most days. I wait until open and then I do a 0 DTE stuff and I play 0 days to expiry. And I play within that day. So if we wake up and we're like, hey, this is a down day, I wait for the trend, I'll probably go on either side of it. So I'll sell some puts, I'll sell some calls, and I'll just ride in between, and I'll close out whichever one doesn't win. Usually I get the decay for the day. So I make a little bit of money, and I stay kind of relatively neutral. There are certain days where I get ego involved, and I'm like, you know what, this doesn't make any sense. 100% I'm going to short the market. That wasn't yesterday. Today I went into the market pretty neutral. I loaded up, actually, at the first dip of the day, but I'm up 19 grand today. So overall in the day, I loaded up at the bottom. It recovered towards the end of the day, and I made some money today. Tomorrow, I think we'll probably have a little bit of a bounce. If there is a bounce, I might find a way to reshort a little bit, but I'm not shorting a lot. I'm keeping mostly cash on the sidelines. I do think I'm talking just the NASDAQ. I think the NASDAQ has a way to fall. It's had a big run. It's rare that we see a quarter where we're up 20, 22% from December to now, and then see another quarter of 22%, especially in the climate that we're in. It's like not for sure whether inflation's done. It's not for sure whether rates are going higher or whether that's done. There's a lot of uncertain times, so I feel like there's just not going to be a big rip 2 quarters in a row. So I think it's probably a safe bet to say we'll be trending flat, maybe trending a little bit up, a little bit down. So use that information how you will. There are option strategies you can use to make money in a flat market, where you just collect decay on those contracts you sold. So that's my thought. Again, I'm still bullish on the long term. Like, I believe tech is going to be huge in 5 years. AI is going to transform the way that we run businesses and do work. It's going to change the way humanity lives in general, potentially ushering in an era of UBI, universal basic income, for the bottom of society, funded by AI, right? Like, AI could support there could be no homelessness and no people starving. Wouldn't be a great lifestyle at the bottom, but it would elevate the bottom a little bit. So AI definitely can save humanity in a lot of ways, or at least the bottom of society that's struggling. They're going to have new struggles, right? Like when you take out someone's, drive to, they have no purpose. Mental illness rates rise dramatically when people look introspectively. Mental illness like depression rises substantially. We're gonna have other issues to battle with. I think we're probably gonna see, and I'm not a bigot or a anti-trans or anything like that. I have people in my family that are, they're trans, so it's fine. I don't hate on any of that, but I think we're gonna see, in direct correlation with mental illness rates rising, people struggling with their sexuality and their gender identity and all of that probably will be a first world problem. As money and pursuit becomes less of a focus, people are going to find things to focus on and to stand out and to make their life's mission or whatever, right? So I think in a lot of ways, it's interesting to see how this plays out, but I think mental illness rates will rise dramatically. It's interesting that mental illness rates are on the rise already. So we'll see how that plays out, but that's my thought. No problem, Mason. Happy to help. Okay, I'm gonna go back up to the Q&A here. Someone says buy silver. I agree with that. Poor man's gold. Buy physical silver though. Go buy collector coins. Buy like quarters from the 1960s. They're pure silver, and you have the historical collector value. Then you have like a small piece you can break off easily. So I like coins because, again, they're pure. You can get pure silver, pure gold coins. But then, like, if you have a gold bar, how do you trade that for a gun or trade that for food or water in like a worst case scenario? With coins, it's easy. It's already parsed up for you. So if I was going to collect gold or silver, I'd definitely do it in coins. You can buy wholesale, great deals. You can go on like Marketplace. People sell stuff at even 90% of value sometimes. I've seen people sell jewelry at big discounts, and I've picked some up. So keep an eye out, guys. You can find stuff. DCAing into Bitcoin and Bitcoin mining stocks right now. Well, I think it could be a good hedge. It's also possible, though, that it's a flip of a coin that Bitcoin retraces back to where it was in the fall. I don't know. Part of me is waiting to buy in still. I have cash. I'm not buying Bitcoin yet. I've got a little bit. I'm gonna buy some more on the next dip maybe, but I don't know. I think there's a lot more. I don't try to trade crypto. It's just, for me, it's just a long-term hold thing. But it's like a doomsday type scenario. I don't put a lot of my net worth in it. It's just some plain money. Crypto is a dangerous asset class. I think Bitcoin's the safest of those asset classes, but some of these altcoins, you're taking a real gamble. Don't put all your money in it. Put a little bit maybe. Bitcoin could do really well in these next couple quarters. We're in a banking financial system collapse type crisis where inflation's crazy at the same time as rates being high. The high rates are punishing tech and thereby punishing crypto. So until we see a relief on the rates, we aren't going to see, I don't think we'll see like Bitcoin double or triple. But again, anything can happen. I mean, it's all about investor sentiment. Stickman says, Mike, can you give me tips on how I can renovate my house on a budget? I've done a lot of these tips before on videos, but it all starts with labor costs. Try to find ways to keep your labor inputs cheap. That can mean hiring sub-trades as opposed to hiring a contractor on job price. They'll get the sub-trades. So Don't hire a GC who's going to hire all these individual guys. Go find a guy who's just a painter. Go find a guy who's a tile guy. Go find a guy who's a boarder. Go find a guy who's a taper. Go find a guy who's a trim guy, millwork guy. Go find someone who's a plumber, electrician. Each of those sub-trades. So you got to bring in 20 people to get the job done, but it can be cheaper in a lot of the cases when you find affordable sub-trades because there's no markup. As opposed to going to a GC who then goes to his tile guy, who then has a worker that shows up to do it. Find the worker who shows up to do it and go to them directly and pay them cash on the weekend, have them come. Find the plumber who's cool with like $400 for a weekend, for a day, sorry. There's lots of plumbers that I know that work for plumbing companies who will come for $400 and a case of beer and can plumb in a washroom in a day if you help them. Whereas the company's gonna charge you $7,000 to do the same job. So you can save a lot of money by doing stuff like that on small, like not at scale you can't do that, but in a small case you can do that for like 1 or 2 renos. What else can I tell you guys? Renovation cost material side, you can definitely go on Amazon and buy most things you could buy at Home Depot for cheaper. Amazon's a favorite for plumbing, faucets, light fixtures, a lot of stuff. We buy most of our rental stuff now on Amazon, and it's just because Amazon just has better pricing. That's just it, and they deliver to your house. So you don't have to waste gas to go drive to Home Depot, sit 2 hours in line, get all your stuff, get back home. It's a half a day sometimes to go to a big shopping trip. I can do it from my phone, and now Amazon will ship to me for free with Amazon Prime. So that's huge. That changes the game in a big way. So big fan of that. Change the game in a big way. All right. Next question was from Brock. Hey Mike, do you think overall a weaker US dollar is a good thing for Canadian wealth and buying power going forward, since they are and will continue to be our biggest trading partner? Yes. Well, yes and no. I think that if the US dollar loses strength, then that could make it difficult for them buying from us, right? So when you think that through, that's not as great. For me, I want to move a lot of my wealth that's in Canada over to the Bahamas and to the US. And so I personally would benefit a lot from the currency dropping. I hope that the Canadian dollar stays strong and the US dollar falls. There is a balance there, right? Like a year ago, it was 9% difference in the Canadian dollar's favor. It's just the reason the US dollar has gotten so much strength is, again, because people are afraid in these tumultuous times of war and whatnot. Again, that's another thing, right? Like we're talking about the US dollar losing, the tagline of this video is the US dollar losing value. You know how they fix that? They go to war. Because in war, people flock to US treasuries. So it's just like, no one wants to go to war with the US. The US is the global dominant, right? And if they, I'm sure it won't be a direct war, it'll be an economic war, it'll be a proxy war. It already is a proxy war with Russia right now, it feels like, in Ukraine, but it is something that I think is very relevant to our investing strategies. We need to have, I think as investors, we need to have protection for those doomsday situations. The good news is that I think if you're owning real estate over the long term, you don't really care. Unless like, your city gets bombed, which it won't. Like the wars are all now proxy. Like there won't actually, I don't think, it's very unlikely that there will actually be a war on US soil. If it were to happen, that's why we always have I recommend a second passport. Go get a second passport in like South America and like Costa Rica, top 20 healthcare in the world, beautiful country. As an example, that would be a place you get another passport, right? It's far enough away, you're in South America, you're safe, you could go and pack up and leave if you had to. But I don't think those scenarios are likely. I think we're more likely to have a sort of economic war with sanctions and things like that, or some sort of proxy war, more likely. We could see the proxy war, elevate to new levels. World War III is a possible. There's some analysts out there who are calling for that. And there are some analysts in the currency space that are saying that the US dollar would gain so much strength because, again, war. The war could end tomorrow, though. I don't think it will, but the conflict could resolve itself tomorrow. Trump said he could resolve it pretty quick. I don't even doubt the fact that he probably could. I don't think that things happen in the same way, when you have different leadership in place. And I think the U.S. has weak leadership. I think Canada has weak leadership right now. But I love the U.S. It's a beautiful country. I love the United States. I love Canada. I plan to spend time. I don't want to live anywhere else right now. So for me, it's just culturally, it works. So the question then is, how do I insulate against those things happening? Can I buy, hedges for the currency risk? The answer is yes. You definitely can. You go on your interactive broker's portfolio. You could even adjust your whole portfolio for currency risk. If you have $1 million in S&P 500, you should be, looking to protect yourself. The US dollar falls 10%, and the S&P 500 raises up 10% this year. You make nothing, zero in Canadian dollars. When you convert back, if you're a Canadian citizen buying the S&P 500, and the same goes the opposite way too, right? So just currency risk is real in business and in your investment portfolio. And I think now more than ever, it is important. I think that probably getting out of US dollars and diversifying a little bit wouldn't be a bad idea either, but you don't have to. Again, you can just protect the currencies that you have with hedges and lock in where we are now. So if you're okay with where we're at now, you could lock in. Myself, I'm hoping that things fall. I'm not locking in right now. Because again, I think that we're going to see US dollar come back and retrace some of the 125 to, I think the US dollar will buy $1.25 Canadian in the next 18 months. So for me, that's going to be an opportunity to buy more real estate, to continue investing in bringing Canadian dollars into the US and whatnot. So, all right. The Achilles says, I'm learning about real estate investing, but it seems like nothing cash flows positive. How do people do it with higher interest rates? Again, a lot of it right now is like, it is difficult with the rates right now. A lot of it is forecasting that rates will come down and or seller financing to get us through these tough times so you're cash flow positive until rates come back down. But it's really just a numbers game at the end of the day, and you got to buy really, dysfunctional type properties that are distressed in order to cash flow. So there's some speculation involved, I think, for some of the major cities that you'd invest in real estate in. But people are doing it still. Not in the major cities, they're not, unless they're speculating. But people are finding ways to cash flow. It's through student rentals, Airbnb, whatever. They're finding ways. What gig besides real estate is good for an early retiree? I mean, there's lots of different gigs you could take on that are great for early retirement. Anything where you can outsource most of the operation of it. So honestly, even jobs that are remote in nature. I know a lot of people who do coaching on the side, or they'll write a course, they'll sell that, or they'll make a website and they'll sell some products, or they'll do it through Amazon, like FBA. There's lots of online businesses you could start too, that you could travel the world and be an early retiree and just collect some passive income. But finding businesses that can run without you is the important piece in retirement. If you want to get a great return, it's a great side gig. But there's great articles you can type into Google, like 50 side hustles you can do in early retirement. And there's a huge list of things. Everything from like, if you play guitar, like teaching guitar on the side or whatever, right? Like it intersects with your hobbies. Have you seen that TD Bank is the most shorted bank? Seems like the street is predicting hard times, presumably in Toronto. William, I think there are hard times ahead, again, because the Canadian real estate market has stayed down. And the challenges right now, like banks like CIBC right now, have huge unrealized losses on their notes. The government has allowed the banks, the big five banks in Canada, to stretch amortizations on these variable rate mortgages, such that right now some of these mortgages literally are the payment that they're paying, they've kept the payment the same. They've stretched amortization from 25 years to 40 and 50 years in some cases, and they've allowed them to keep paying the same mortgage payment, but they used to pay principal and interest. Now it doesn't even cover the interest. It's $0 in principal. There are some that CIBC has in their books, and all the banks probably have on their books right now, that are literally, they're negative every month, like negative 300 in interest. So they're literally not even collecting the entire payment of interest that's accruing every month. That's scary. And the banks could, if rates stay higher for longer, what happens is commercial real estate, it's all on terms that renew. And when that happens, when that commercial real estate starts renewing, there's major pain for the banks. So I am not bullish on the banks. I do not have huge holdings. I have some holdings. They've been beat up the last couple of months, given what we've gone through. But yeah, I mean, they'll probably be fine because the government just bails them out, right? So, and in Canada, again, our financial sector is so big that they'll even bail out the shareholders, most likely. Banks won't fail. Government will just step in. So would I say they're going to zero? Never. Not in Canada. Won't happen. They'll just tax the shit out of people to pay for it. Will the inevitable law... No, I won't be there to pay the tax bill. I'll be gone. Bye. Will the inevitable loss of USD as the reserve currency, CAD, sink in value with the US? Potentially. I mean, you'd have to think through how this plays out, but it potentially has negative effects for us as the US being our strongest ally and trading partner. As they lose strength, potentially we could also. However, I think that many countries would still buy our natural resources, right? So like, just because the US dollar isn't as strong, they can't buy as much lumber from us or wheat or whatever they're buying from us, right? We have a lot of natural resources. Like we do have a lot of minerals too, um, or even fresh water, like all of that, right? Just because they're not buying that from us, other countries might. The challenge is our government, is our current government, the Liberal government, smart enough to do what's best for Canada at the expense potentially of our trading partner next door? And it depends on who's in government, right? Like Biden probably gets along pretty well with Trudeau, but if Pierre Poilievre, if he gets in as our conservative leader of Canada, the Conservative Party, and he wins, there's a good chance he's going to win. I think people are fed up with Trudeau. Then I think that there could be some big changes, and the Canadian dollar would rally under new management. So, an election's coming soon. Can't wait. Not soon enough, but it's coming soonish. So, in the next couple of years, we might see a big change in Canada, and I hope we do. Usually, we swing back and forth, the pendulum, right, from liberal to conservative, back and forth. And hopefully, it's time for the Conservatives for 4 years. We'll see. But yes, in theory, having the U.S. reserve, not as much, right? Like it does, I guess, if the U.S. dollar falls in value, then again, they have less purchasing power, so the Canadian dollar could fall with it, in theory. So you may want to hedge against the Canadian dollar falling against other global currencies. Again, if your plan is to only spend in Canadian and U.S. dollars like mine is, I don't care about other currencies, really. Again, there is some trade implication for that, but I'm mostly concerned with how the Canadian dollar is doing, how the U.S. dollar is doing. What I really want to see is the Canadian dollar get strength to the U.S. dollar right now. Just short term would be really great. That's my personal bias. I'd like to see that happen. I think it will happen, but again, it might not. So protect for either way. Hey, no problem, Mason. Happy to help. Sadek says, "Hi, Mike. First year student at U of T. How can I get into real estate?" So in your first couple of years, you can invest in REITs, real estate investment trusts. They're publicly traded. There's lots of them. You can invest in. You could start touching a small piece of many different properties. They're now crowd surfing. I don't know if there are in Canada. I think there's crowdsourced real estate funds you can buy into, where like they have properties you could buy a small stake in, like as low as $100 or $200. It's not as efficient. You're not buying any undervalued deals, but you could buy into the market in theory. So if you believe that, like on Toronto's prices have dropped 29% on average. So if you believed in that, there are REITs that invest primarily in Toronto. You could ride that wave out. In the next 5 years, you probably get a huge lift as rates fall, right? You'll get a huge lift on that. So if you just want to speculate on the price of real estate and invest into that, and even get a piece of the cash flow of properties in the Toronto area, there are real estate investment trusts called REITs that you can invest in. They're publicly traded. And you go and buy them in your Quest Trade account, your Interactive Brokers account. You can go buy them. So that'd be a great way to get started in real estate. Then there's things like you could go work for a realtor, you could work for a wholesaler, you could find a property on Facebook Marketplace or Kijiji or online, Craigslist, and find something for sale, lock it up under contract, and then assign that to go to a real estate meetup or something and tell some investors, hey, hey, I have this or that deal. You explain it, and there's probably someone who will pay you a fee for that. And that's you investing in real estate by learning how to write contracts and how to assign them. It's really easy. You can trade the paper. I traded a paper once for $400,000. I traded a piece of paper that had the right to buy a property for $400,000. It's a big property. But that's the power of trading paper. And you don't even own the underlying. You put a small deposit down, you lock the deal up under contract. You have the right to close on it, no one else does. You can sell that interest to close on that property. If you bought it for enough of a discount, there's enough of a value wedge there, you can sell that and split that with the buyer. Or you can partner too. I've done a lot of that where it's like, hey, I have a deal. It's worth $100,000 more than I have. This paper is worth $100,000. As soon as we close on it, immediately, I'll JV, you bring the money, I'll bring the deal. Sometimes I'll even bring the management too. And I get a set percentage of profit. And we split on that, and that's a win too. It's a win for the investor who doesn't know how to find those deals. It's a win for the investor's capital. It's a win for you because you get to buy the deal. It could be a win-win. So you can definitely get into real estate without your own money. You just have to know how to actually practice business in real estate. A lot of people just passively buy a property and they hold it and they don't really treat it like a business. They're not full-time real estate investors or wholesalers or flippers or whatnot. Are single-family homes generally not worth it? Seems like very little cash flow, positive with high interest rates. Generally, in most major cities, no. In most major cities, they don't cash flow. They don't make sense. There are exceptions to that rule, but by and large, you're right. You got to take a single family and add a basement apartment to it, or put an accessory dwelling unit on it, or buy a duplex and make it a triplex. You got to add units because when you add units, you can increase the rent roll. It can start making sense. Doesn't, most single families don't make sense. For Airbnb, it can make sense, but as a long-term rental, nope. There are some, but most cities don't. Toronto, Vancouver, LA, like New York, none of it would make sense. SJ says, hey Mike, if you're buying a multiplex, say a 4 or 5plex in Windsor, what's the average price per unit you'd pay? Again, it just depends, but I like to buy at $100,000 a unit. So that's like the wholesale price I like to buy at, and that usually means it needs some work, but about $100,000 a unit. So if it's a 5plex, I'd pay 500 grand for it, typically. Depends on the level of work. It's hard to just say there's like a rule, but in London, 200,000 a unit is very common for like a nice unit at market rents. So a 5plex would go for like $1 million. Yeah. In an A- to B+ neighborhood, maybe probably more than $100,000 in Windsor in a good neighborhood. Raz says, when the Fed pivots, that's when USD will sink. Why did you get jab? Again, like it was, I'm not pro-jab. I really am not. It doesn't make sense for young people at all. Raz says, when the Fed pivots, I didn't answer that part of the question. So when the Fed pivots, that's when USD will sink. It could. Right now, the Fed is definitely setting the world stage. So we're kind of just watching Jerome every time he speaks, because he kind of has us by the balls. Our real estate portfolios, our stock portfolios. It's really, again, even as Canadian investors, a lot of it's up to what the U.S. does, given that they have so much, not the word clout isn't the word, but so much influence over other central banks. And we sort of have to follow suit, because if one country is able to raise rates to a certain point, other central banks struggle to then raise capital. Because again, every central bank's trying to control inflation by controlling the supply demand, right, for dollars. And they know that by crushing demand for buying things, the inflation will fall. So that's basically their only tool in the toolbox. What's interesting is in the last 3 weeks, the last year we had quantitative tightening, which means they were reducing the money supply. Rates were coming up, it was pain, they were reducing the money supply. In the last 3 weeks, they bailed the banks out. A lot of them. There's been I think almost 150 banks that have taken money from the Fed. So to pretend there's just like 3 banks that have failed. No, there's been lots that are failing. But again, the Fed's backstopped everyone. They're all safe because the Fed just hands money out. Well, where does that money come from? Oh, from the FDIC premiums that banks and customers are paying effectively through their fees that they pay to the bank. No. It's coming from the government. They're printing the money. They're lending the money. Effectively, the taxpayer has to pay. So they're creating supply. And when they create supply, they put that money out there, it should have been lost. Like that money should have went to its debts, but they're going to cover all those debts, right? Took big risk. They got bailed out. And anyway, my point was this. 2/3 of that quantitative tightening has been reversed in the last 3 weeks. They've printed 2/3 of what they tightened. So we're seeing an injection of money, which we might get some readings, even the next report might actually be good. Inflation might look like it's going down. But guess what happens when you inject a whole bunch of money? And by the way, Congress is also trying to raise the debt ceiling and stimulate. So when they hand money out, if on one side Congress is handing money out while Jerome's trying to tighten supply, guess what? He has to stay higher for longer, because they're printing money over here to pay debts and to, because their debt is they could barely even cover it right now. It's taking up a large percentage of just the interest cost on the Fed's debt right now is a large percentage of the overall budget. They can't sustain these high rates for long without printing. And as they print, they create more money in the supply. They hand more US dollars out everywhere. And it makes his job even harder. Higher for longer. So that was my thesis a year ago. And I think we're still going to see that play out. If I'm wrong, I'll pivot. I mean, I'm not perfect, but I see that playing out. And it seems to be right so far. So, I mean, I'm glad I sold my real estate portfolio off last year. 2022, right at the peak, I sold 16 properties. I'm feeling really good about that, especially in Ontario where prices fell 25%. I'm feeling real good about that. I had millions in cash. And I mean, for all that I've lost in crypto, I've saved more than that just selling my properties off at the peak. So, I mean, you can say what you want about the inverse Rosehart, but the inverse Rosehart's done pretty well. Okay, I'm going on to the next thing here. Any good Canadian stocks to buy? There's lots of great Canadian stocks to buy, lots of good dividend stocks in Canada. We have a lot of natural resource companies and suppliers of natural resources like Enbridge as an example that I think are great plays. I love some of the oil stuff right now. It's getting bid up a bit, but I think there's more pain to come potentially, especially if we have a war over the reserve currency. I think OPEC could see oil push to $100 a barrel. So a short-term play could do really well with an oil play. I never bet the farm on any one thing. I like to spread it all out, right? But it could be an interesting piece of your strategy. All right, guys, I think my phone's dead. My battery's dead. All right, guys, I got to wrap this up. My battery is dead on my phone. I got to wrap it up. See you guys. Secret to unlocking wealth through you is to spend less, earn more, and maximize returns and the difference, everyone. See you guys next week. My battery is dead. Bye, guys.